All right, what's up, guys? Gonna do a quick little market direction school. Hopefully, this kind of answers a little bit of any doubts you may have on why you might be looking to buy or sell in current market conditions. So, I'm just replaying this US 30 trade that we had today. Even though it was a loss, I think there's still some kind of lesson to be learned here. Whereas market direction analysis was on point, but unfortunately, market did whatever market's gonna do and didn't comply with our entry, but it did give an entry to get to the next target. So just getting right onto it. What's important with market direction is knowing where price was before, right? So technically, if we're looking at it today, right? Today was Tuesday, whatever. It was around 9:45. You have to look left and look at what areas the market last touched or came off of that gave a big push, right? So we see that yesterday, Monday, price gave this big pullback to the downside. And then we'll see that there's an M15 from Friday that price was respecting on Monday. There was no trade that we took on Monday for US 30, but we can see coming into Tuesday that we do have a void to fill, right? And price is previously respecting an area of demand. So a higher area of demand, and we can see current price is disrespecting supply on the lower time frames, right? Even though this M15, you can use both M15 for market direction and for entries. So we can see that price is respecting demand, and this area of supply is not the true area of supply because it's not the area that created the entire move. This is actually the supply that created this entire big push. So you just need for higher time frames and lower time frames to be in sync to look for your entry points. So lastly, price was respecting demand. So you have to look where the next area price could get to supply wise, right? Supply wise, our next target would be this H1. We are looking for buys because we just saw that price was respecting demand. We have a void to fill, but you cannot just jump into a buy if price is coming off of supply on the lower time frame. So seeing as how price came up to this area and then kind of looked like it was respecting this M15, you would have wanted for price to break supply to confirm that you are indeed buying still on the lower time frames as well as higher time frames. So they have to be in sync. So higher time frames are telling us to buy. These lower time frames, we did break this supply from London, so that was a good indication that we were going to the upside. Then we had this M15 as well as this M15 here that we needed to make sure that we were breaking. So once price got up to this point, we had our entry set, M15, M5 from Pre-New York, and that would have been our entry. Unfortunately, price had other ideas and ended up taking us out. But we'll see here that price actually ended up coming back to supply, giving a reaction, and then we had a new area of demand here. We had an M5 and an M15. Let me just mark the entire area so you can see what I'm talking about. And then you can see we also had an M5. So technically our target for supply still has not changed. I'm going to delete this M15 just because price actually ended up using the M5. But the direction for price hasn't changed. We're still looking for price to buy, but we need price to set up on both time frames to be in sync to be able to get us to this supply area. So our target is still the H1 because price never reacted off of any supply here. So this is just like a wick out or manipulation, whatever you want to call it. Like this whole thing is fugazi, whatever. It's not real. So this is just like liquidity in the market. It is what it is. We were just a part of that liquidity sweep. Then you see price does indeed come back to this area of demand, right? Higher time frames are still telling us to buy, so our analysis is still correct in that sense. Price ends up coming down to this M5, and let me show you here. There was an M1 confirmation. As soon as we get the shift of structure, right here. Hold on. Let me go back. So as soon as we have this here, right? So you have lower high, lower low, lower high, lower low, lower high. Boom. It comes into this M5 with low day, gives this big push, shifts structure above this previous point. So now you can see we have the left, the head, and then this M1 would be our entry point, because now lower time frames have shifted. We're setting up for buys. Our higher time frame is setting us up for buys as well, and this would have been our entry here. Although this was out of session, so we didn't end up taking this one, but I did think that this was a good one to break down as far as lesson wise, because it does end up working out and the analysis is still correct. We are still not in the wrong. We were just a part of the liquidity grab today, unfortunately. But you will see that price ends up getting to this higher time frame target, and then you can clearly see that price is now giving that reaction off of this higher time frame. And I did think that was great, because we can see that you don't need to predict the next 10 moves of the market, but if you can predict where the market is likely to go to next using market direction, that will greatly improve your entries and increase your confidence when taking an entry. Where we knew that this was the next target, so we weren't wrong. Analysis was correct. We did get up to those higher time frames. Um, Unfortunately, it was a loss for today. There's nothing we could do. You can see this was a beautiful 1 to 4 with an M1 shifted structure, literally no drawdown. Beautiful, beautiful, with our target still being the H1. And now we can see price currently is having a reaction off this H1, H4. So going into tomorrow, we will be looking at what price does. We do have a new H1 here. Should price respect this area overnight and have a reaction, then we would think, okay, where's market gonna go next? So should price react off of this H1 here, then you would think, okay, I can predict the next possible move. Where would price go to next? It would probably go up to this H1 that was left behind. And then when you get there, you can also determine, if it respects this H1, you can possibly determine, okay, where would price go from there? So you're constantly updating your market direction. So as of right now, our first target is this H1. We would be looking for sells here, but up until higher time frame demand. Also, it depends on in the session that you're in. Obviously, we're out of session. It is Asia session, so I wouldn't really look to trade this at all right now. But higher market direction, higher time frames, that's what it's all about. It's about looking where the next area could be. So we weren't wrong on the direction. Unfortunately, we just got worked out, and it is what it is. Hopefully, that was a quick little nugget class for you guys, and hopefully it helps you guys out with any future trading on market direction. But be very diligent. Look left. Go to H1. Go to H4. Go to M15. Go to M5. Look for anything that price could be reacting off of. And that will surely help you from, one, getting better entries, or even finding entries that you may have not seen before, and avoiding losses as well. If you see an M5 that price is kind of reacting and it deviates from what the higher time frames are doing, then that'll keep you from taking a loss. So have a good one, guys.